Dr. Babasaheb Ambedkar Open University.
Welcome my dear students to Dr. Babasaheb Ambedkar Open University Ahmedabad in Chaitanya studio of Dr. Babasaheb Ambedkar Open University Ahmedabad. Today we discuss the topic called Management Accounting. In that block 1, unit number 3, Tools and Techniques of Management Accounting. After we just begin our session, that we have to define what are that learning objectives over there for this particular chapter, my dear friends. So for that, following hours, or we can say the learning objectives for this particular unit, that is tools and techniques of management accounting. The first learning objective is significance, or we can say the meaning of management accounting. Then devices, or we can say the tools and techniques of management accounting, then features of management accounting, then point of interest and restrictions on the management accounting. So my dear friends, these are the learning objectives for particular this unit. Now move to the what are the introduction. What is that introduction, my dear friends? The number of modern tools and techniques, or we can say the devices, have been created to meet wants of present day trade, which work in a complex environment. A number of ancient science have been created on few lines to meet the perquisites of the modern business. The facilities will be given to that particular modern business. And management accounting is in this way an unused frame of the ancient science of financial accounting, which has been so formed as a shoot of energetic environment of the modern business. For some decades we can say that as to the shoot to the energetic environment, and when we are talking about that the few decades back, then the business work under the straightforward condition and financial account may satisfy its necessities. It had basically to record money related exchange in a books of account and display the profit and loss as well as the balance sheet. Sometime recently the proprietor of the business for the decades in this manner accounting implied as it were introduction of financial transaction in this way, and accounting created on the simple line only. The modern business has however expanded of such limits that it is beyond the capacity of few persons to control all its aspects. Control and coordination of various activities of a business now require accurate data on the basis of which action can be taken. If we are talking about the old techniques of decision making on the basis of intuition, only it now out of date. And accounting is a mine of a precious information which can guide management in taking policy decisions and in discharging its function of coordination and control effectively. The function of management accounting is to present the accounting data in suitable form of assist the management in this direction. That means, my dear friends, if you don't have the financial accounting in proper manner at that point of time, this management accounting may be in a hurdle position, and which creates some difficulties to take a decision, to make a policy decision, or to maintain the functions, or we can say the discharge of function. So for that, my dear friends, the management accounting play an important and a vital role in a nature. And thus we can say the significance of account management accounting, or we can say the accounting, is a very wide scope, where you are not dealing with the only we can say the books of accounts, but you have to apply your own mind for taking a decision and for making an accounting in a proper way. Now after that, the introduction point, we move to the significance or meaning of management accounting. A management accountancy is essential and may be portrayed as an accountancy situated to help management by displaying accounting data in an appropriate manner. The report of Anglo-American Committee of Efficiency in 1950 has characterized as a management accountancy is the introduction of accounting data in such a way as to help the management in creation of policy and the day-to-day operation of undertaking. The definition recommends that the management is in need of data for a supervisor, or we can say the superior choice making additionally, and it requires the data for working out the viable control. The management data is within the form of reports to meet the desire of modern commerce administration, get viable data with the assistance of differentiate, or we can say the different tools and technique also. Why, if you have the data but you cannot use that data in a proper manner at that point of time, my dear friends, that data is not relevant for you. So ultimately the viable data will be the help for taking decisions also, for making an appropriate efficiency also, and that accounting data, or we can say the viable data with assistance of the different tools and technique, it will create an amazing features of that particular management accounting, which can be the help to the policy making, or we can say the decision making, or we can say the policy decisions, or make any functions discharging also. So thus, my dear friends, the tools and techniques are the very important in nature. Now let's discuss, sir, what are that tools, or we can say the devices and the techniques of management accounting. The first, my dear friends, that is the standard costing. Then second is marginal costing. Then third is budgetary control. Fourth is historical costing. Fifth is financial policy and accounting. Sixth is control accounting. Then decision accounting. These seven are the tools or techniques of management accounting. Let us discuss the first, that is standard costing. The standard costing framework could be a strategy of costing in which benchmark or predetermined cost are settled for each thing of a cost, and they are compared with genuine executions, and we can see the change or differences are found out, and to see the how actual contrast, or we can say the contrast from the standards. That means ultimately you are defining the difference between the standard and actual data, and what are that variables are considered. Is we can say that the standard costing techniques would be the best for analysis for that particular data, and the fluctuations are discovered through which the control function gets an effective. So ultimately the variable, or we can say the variances, the journey, the variances to make a standard decisions, which is known as ultimately the standard costing, and it ultimately define the difference between the standard and actual data. Second is, my dear friend, that is a marginal costing. It could be a modern procedure of the decision cost, in which the costs are we can say the partition into the fixed and variable, that ultimately the partial at that particular two variables into the fixed variable and to the variable, and we can say the variable in nature. There are particular expenses divided into these two categories, that is fixed and another is a variable. Then, my dear friends, the fixed costs are not included as a portion of a cost of generation, but recovered from the margin between the sales price and the variable cost. So if we are talking about in a framework like in a mathematical way, then sales minus, my dear friends, variable cost, it is nothing but your contribution, minus fixed cost is equal to what? Your profit. So the framework is greatly valuable in showing the information. Sometime recently the management with regards to the cost also, revenue and profits. Thus we can calculate in that manner, my dear friends. Sales minus variable cost is equal to contribution. Contribution minus fixed cost is equal to, my dear friends, profit. So this particular chart or mathematical expectations will be available for the marginal costing definition. Let's take an example. The marginal cost is also known as a variable cost, which considered only and only the variable cost. If you have the we can say the offer of 100 units, sale order, that is 100 unit at rupees 50, or we can say that rupees 100, and your variable cost is 20 and fixed cost is 20. So what are that profit? So 100 minus 40 variable cost is equal to what, my dear friends? 60. 60 is what your contribution, and minus fixed cost 40, that is what your, my dear friends, ultimately your profit. But someone give you this offer in that way, that is that person buy that good at rupees 90. So whether you accept that offer or not, for that, my dear friend, you have to learn marginal costing, which is one of the best techniques to take a decision in management accounting. So according to me, yes, you have to accept that offer. Why? Because you already your fixed cost recovered from the previous order. So there is an only and only the variable cost will be charged over there, and you earn a maximum profit over there. So this is what, my dear friends, all about marginal costing. Now let us discuss the third point, that is budgetary control. The business policies and the plan expressed in a financial term under the system of budgetary control. Budgets are prepared covering every aspect of a business. Actual performance is compared with budgeted figures and the coordination of the control made by the effective thoughts budget. So ultimately, my dear friends, this is nothing but we can say that the control over your the budget, that is control over your expenses in that way. Yes or no, my dear friends? So next topic is, my dear friends, that is a historical costing. So what the thing about that historical costing? The historical costing is concerned with recording and ascertain the cost after they have been incurred, as against, that is the standard costing. Standards for the cost are set for the each elements of cost in advance before manufacturing is undertaken. The historical costing is not, we can say, the much used to the management, but may provide the basic future plan about that particular manner. So this is what, my dear friend, historical costing. Next is, my dear friend, financial policy and accounting. In accounting, the transaction and events are the most important in nature, and for that, after defining that particular account, that your financial policy and accounts are also important. The financial policy is concerned with determining how the business is to be financed, what type of securities are to be issued, and what should be the source of long-term and short-term borrowings. The financial accounting is the basis of management accounting, and besides, it's to be the compulsory for joint stock companies to publish the final accounts. Now let us move to the control accounting. It is the technique used. It is what, my dear friend, the technique used in the different system. For example, variances analysis in the standard costing, then a system of statement and report in budgetary control, internal check and internal audit, etc. are the techniques for control accounting. That means that you control sum of part, or we can say the sum of department, which is important in nature to control over that. So this is what, my dear friend, ultimately that you control in a different manner, or we can say in a different analysis point of time. And it is in the presentation of data in this respect that the management accountant can show his, we can say that his inability in the analysis and interpretation of data. That means whether there is an error, or we can say the guiltness over there, then it ultimately defined in that particular interpretation and analysis of that particular data. So control accounting is also important in we can say the tools and techniques of the accounting. Then, my dear friend, decision accounting. The management accountants recommends the effective course of activity on a specific extent based on the information curtailed, or we can say that that information outfitted by over the frameworks. And when choice with respect to the selecting a capacity use venture to be taken up, or in a case of make or purchase a choice, estimating a choice, etc., the management accountant pre-present, or we can say the present the information in we can say the explanatory frame and purpose of profitability course of activity within the given circumstances. So when we are talking about to make a policy or policy decision, at that point of time, my dear friends, the management accounting play a vital role. So we can say that the management knows the significance of assistance in making the choice of we can say the premises of such information, and in expansion, the management account, or we can say the management accountant, in making choice on the premises of such information, which is also the important in nature. And in expansion, the management accountant makes the utilize to the other strategies like return on capital, capital employed techniques, then break-even analysis, the interfirm comparison, operation research, marginal costing, etc. Whatever for the use for that particular make a decision in a policy, or we can say the policy making system. At that point of time, the decision accounting is very important. So this is what, my dear friends, all about to define the account management accounting tools and technique in a different manner. So kindly revise it, which is very important for your study, for your study aspect, that what are that particular tools which can be the easily help in a nature for defining accounting in a appropriate manner. Yes or no, my dear friends? So before we go for the another topic, these are the important aspects where we are discussed the different point of accounting in that manner. Let us revise that particular thing where the tools and techniques are important in nature. So these are the tools and techniques which can be the use in management accounting as we learn in a session. The first tools and techniques is nothing but your standard costing. There are different types of variables, variances in standard costing. Like you have a problem in a material, labor, variable overheads, fixed overhead, selling and distribution overhead. These all are variances considered in a standard costing. And this variances, the analysis and the interpretation of this variances is very important for formulating an policy also, for formulating an analysis way also, for taking an decisions also. So there are a few different types of analysis, or we can say the variances over there, which could be analyze and interpret in an efficient manner. Second is, my dear friend, marginal costing. The marginal costing is nothing but your variable costing. While you are talking about, you consider only the variable cost over there. At that point of time, my dear friends, this particular marginal costing is there for you. And to provide and take an efficient decision, the marginal costing helps in efficient manner. Then, budgetary control. While you are defining revenue and expenses, and at that point of time, my dear friends, you don't have the control analysis over there. So budgetary control helps you in that manner. The historical costing. The historical costing is nothing but to defining, or we can say the defining the rules of that particular manner, which can be the easily enabled in nature. And historical costing is not, and we can say the take in this manner, which can be the use in present situation. In present situation, the analysis like in budgetary control, marginal costing, standard costing, financial policy and accounting, these are important. And for that, my dear friends, these tools and techniques which can only help to take a proper decision in management. Next is financial policy and accounting. As we learn that all the transactions and events are important, and that recording of the transaction event in accounting form, it is also important. While you analyze and interpret the balance sheet and P&L account, so you have to define what your financial policy in efficient manner. And on that point of time, we can say that this techniques of management accounting is very important and useful in a nature. And for that, my dear friends, we achieve our goal over there. And we definite accounting, or we make the definite accounting system where the management can take a decision in proper or efficient manner. Next is, my dear friend, control accounting. That control accounting is nothing but control what your analysis or what your data which can be the not used for you. As we discuss in this point, that is a control accounting, it is a technique used in a different system. That is variance analysis, that is nothing but your standard costing, yes or no. Then system of statement reporting, that is in budgetary control. Then we can say that the internal control, or we can say the internal check and internal audit also. While you defining your accounting in appropriate manner, when your financial accounting and financial policies are play a vital and key role in that management accounting system, at that point of time you have to ascertain, or we can say you have to ascertain such a level of examination for your internal check system to defining an efficient manner, or to make a decision in efficient manner. And for that, the control accounting is also important in nature. Then decision accounting. Decision accounting is a very wide subject for making a proper policy decision. And for that, my dear friends, you have to study all the aspects of accounting. To recommend something, to give an advice on particular manner, or we can say that in a particular nature of business, to make an appropriate decision, at that point of time, my dear friends, you have to deal with this decision accounting. Yes or no? So this is what, my dear friends, we learn in today's session. That is introduction point of management accounting, then my dear friends, significance of management accounting, then different tools and techniques of management accounting. And after study this topic or watching these videos in our video series lectures on the management accounting, you have to evaluate yourself. Evaluate yourself in these three aspects. First is, my dear friend, long question, second short question, and third is multiple choice question. So after watching this video, you have to write a long questions over there. That is, first, describe the significance of management accounting. Second is, describe the tools and techniques of what, my dear friends, management accounting, which can be the help in particular manner for the taking decisions. After that, in a short question, my dear friends, describe the decision accounting. Before you describe that decision accounting, you have to learn what, my dear friends? Different techniques of the management accounting. And for that, my dear friends, second question is for that, how the management accounting technique is useful for forecasting. This question is an applied question for your knowledge. After evaluating the techniques of management accounting, you have to think about it, why it is important or why it play an important role for forecasting, whether that management accounting techniques or management accounting system is help for the forecasting, yes or no. Next is, my dear friend, multiple choice questions. In first question, which of the following tools and techniques are not used by the management account? That means, my dear friend, you have to evaluate yourself if the tools and techniques are used in management accounting. First is standard costing. Whether the standard costing is the tools and techniques of management accounting? Yes, answer is that. So standard costing is a tools and technique of management accounting. Then budgetary control is also tools and techniques of management accounting. Then operating costing. No, operating costing is not used in the management accounting. And marginal costing is also used in management accounting. So here, my dear friend, three uses of that management accounting. The first is what, my dear friends? That is a standard costing also, marginal costing also. And third one, that is operating costing, is not the method of, or we can say the techniques of management accounting. Let's move to the second question. The second question is, management accounting is simply means may be described as a accountancy oriented, assistant management by the presenting, or we can say the presenting the accounting information, then accounting information in a suitable manner, and D, all of the above. So while we defining the management accounting in a simple way, that the all these three aspects or all these three we can say that the three options are the correct, and for that, my dear friend, the answer is what? All of the above. Management accounting, we can simply means that the may be created and used for the accounting information also. So this is what, my dear friends, the management accounting aspects. And third portion, that is your multiple choice question. Now, if you have to refer more on this subject, or we can say particular in this unit, then these are the different reference book over there. Kindly see that the reference book over there for defining the different we can say the different system over there, the management accounting, and the different reference books are also available for your reference. The first is, my dear friend, that is Advanced Management Accounting by the Ravi Kishore, the 1917 edition. Management Accounting by the R.S. and Pillai and the Bhagwati S. Chand. Then Accounting for Managers by the Sudhir Prakashan also. So this is what, my dear friends, ultimately our portfolio, or we can say our agenda to learn this particular unit in efficient manner. Hope you learn well. So after watch this video, you have to evaluate yourself in these three aspects, and after that, if you want to learn more, then you can refer the different authors book also. Hope you learn well. Thank you very much. Let's meet in a next session. Thank you, my dear friends.
स्वाध्यायः